Hello everyone, welcome back to Financial News and Payless Sites. Today is February 7th, 2022. And of course, the gentleman next to me, co-host Paul Munichel from Ameriprise. Paul, we're in February. Unbelievable how time is starting to fly. And the market is going through all kinds of changes compared to what we had experienced last year. I'm just going to let you take it and tell us what's going on.
Time is flying by. Soon enough, it'll be 90 degrees out, and we'll be complaining about the heat. But
You're right.
One day at a time till we get there. Today, I wanted to talk about the earnings season and give the viewers a bit of an update on what's going on. So in earnings, we are seeing an outperformance accelerate, but forward estimates are seeing some cuts. So as we pass the halfway mark in the current earnings release season, S&P 500 companies are now seen as generating year-over-year earnings per share growth for the period of, believe it or not, 29% on sales growth of 15%. Now last week at this time, blended results, and that's actuals plus the estimates, had looked for Q4 earnings per share growth of 24% on sales growth of 14%. Through last Friday, 283, or about 56% of S&P 500 companies had reported their financial results for the fourth quarter. The results for the current reporting quarter continue to outperform by a fairly wide margin. Forward-looking estimates have been experiencing cuts. Now, estimates for the current quarter, Q1, are $1.23 below their December 31st estimated levels, currently $51.92 versus $53.15 on December 31st. Estimates for Q2, Q3, and Q4 have followed a similar pattern. Now going back for the Q2 estimates, they're currently 91 cents below their year-ending levels, while Q3 is 83 cents lower and Q4 is down 61 cents. So cuts of this nature are typical of market periods that bring about volatility in the market and reflect fundamental changes in the underlying investment landscape, i.e., such as we are part of seeing with the Federal Reserve policy. Nevertheless, S&P 500 earnings are still forecast to grow by about 7% this year on sales growth of about 8%. So lots to consider there. We are seeing projected cuts, but earnings are still fine, reflective of a market that's changing. What that means for stock market returns is yet to be seen, what unknown, but things are changing in terms of forecasted earnings.
Yes, and the Ameriprise that sent this report in as of this morning, U.S. stock index futures are flat this morning after a market went through two consecutive weeks of gains. Yeah.
The market's kind of searching for some direction. We've got a big Fed meeting in in March, where there's supposedly going to be a rate hike increase. If it's going to actually happen, what percentage they're going to increase the rates. The market's, I think, kind of waiting in some regard to see what's going to happen there.
But there was some correction as soon as that was announced. And don't you think some of that has already been taken into consideration already?
I think so. There's always some consideration. And of course, there's multitude of factors that affect the stock market, the Fed just being one of them.
Yep.
But with a date, we know in March we're going to get some certainty. I've always said market hates uncertainty.
Yep.
And factor in the Fed's uncertainty with what's going to happen in March versus all the other things. Delta variants, Omicron variants, inflation, unemployment. There is a lot brewing out there. Issues with Russia, and is there going to be a military conflict there? All these question marks, the market typically doesn't like. Right. So it's searching. It doesn't know which way it wants to go.
Right. The European markets, as of this morning, traded higher at midday, while markets in Asia closed mixed in a narrow trading range. And I'm not surprised to hear that. The U.S. Treasury ticked lower this morning after the 10-year hit a 2-year high last week.
So if it hit a high, that means the yield was down, right?
Yes.
Because it's opposite.
Right.
And it's just kind of correcting a bit, going back to the norm maybe a little bit with what you're saying today.
And for those that are in gold, gold is a plus 0.3%. The WTI crude is down 0.8%. We need that down 8%, not 0.8%, and including the margins. And the year-to-date returns are as follows. The S&P 500 is a minus percent. Dow Jones is a minus 3%. And the NASDAQ is a minus 9%.
A little bit better numbers than last week, but still not what we're used to given the last year. Last year, every week, we're positive, positive, positive.
Well, it's because of the corrections.
It is. Yep.
Yeah. Okay. Paul, thank you for your report for Paul Munical. And giving his report, we are going to ask you to stay with us for his report on your money. And that's another show that he usually has a topic for, and we're going to listen to what he has to say. Stay with us. We'll be right back with that show. And thank you for staying with us with our show, Your Money. And Paul's going to be talking about life insurance and how that changes from time to time. Paul, get us an insight on this.
Thanks, Ron, and that's exactly what I'm going to talk about. Life insurance, those needs can change over time depending on your situation. So let's kind of dive into the topic.
Okay.
It's easy for many of us to approach life insurance with a, I'll handle that later, or a set it and forget it type of mentality, and to assume that you have time to sort out the details of adequate coverage some point down the road. Yet, life insurance, it can play a key role in protecting your loved ones financially should you pass away unexpectedly. Now, the role protection plays in your financial plan often depends on your life's stage. So let's go through several examples of when you may want to reevaluate your life insurance options. Let's start out with young adults. They're starting their careers, and when you settle into your first or second job and take on responsibility for your own financial matters, you're likely balancing a myriad of priorities. Now, these may include paying off significant student loan debt or managing the mortgage of a newly purchased home. In the event of your death, you could leave your loved ones on the hook for covering your financial obligations out of their pocket. A life insurance policy may help provide the cash flow for your parents, siblings, or another trusted beneficiary to manage your affairs without it becoming a potential burden. Another stage in your life may be after you're newly married. As couples, you build a life together with your spouse. It's likely that your individual financial responsibilities will become intermingled, even if you choose to maintain separate bank accounts. If you die prematurely, your spouse could be drastically affected by the loss of your paycheck and added expenses. Life insurance can help protect the financial contributions of each spouse, helping the surviving spouse carry on without major lifestyle changes. Next stage of your life could be the parents of minors or young adults. So for many Americans, the need for life insurance becomes top of mind following the birth or adoption of a child. If you have or are considering starting a family, now is the time to evaluate your insurance policies, ensuring that you have enough coverage to meet your family's day-to-day expenses. In addition to future financial goals, you may want to ensure that regular living expenses are covered for your family over a period of years, as well as education costs for current children and retirement savings for the surviving spouse. Moving on in the lifestyle stage, we move on to older adults nearing or in retirement. So as you accumulate wealth or become an empty nester, your need for life insurance may decline. Be sure to maintain enough coverage to protect your retirement savings. Once in retirement, the need for a death benefit, which provides annuity or lump sum payments to the surviving spouse, may become less significant. Certain types of life insurance policies may offer the flexibility to borrow against accumulated cash values to provide cash flow in retirement. Either way, you need to evaluate your coverage against what you anticipate spending in retirement to see if these or other options could help your situation. Last but not least, those preparing for the transfer of assets depending on the size of your estate. Taxes may reduce the amount of assets you intend to pass down to your heirs after your passing. Life insurance could be one way to protect the interest of family members and other beneficiaries. So for example, you could purchase a policy with a death benefit that could provide liquidity to offset the impact of any taxes that would be due at your death. This can help survivors avoid being forced to sell assets to meet tax obligations. Long story short, no matter what your life stage or financial situation, it's important to have insurance in place to provide for your loved ones. Make it a priority to regularly review your coverage and ensure it covers the changing needs of your family. If you would like help assessing your options, I recommend talking to an insurance professional and/or your financial advisor who's familiar with your financial priorities for some guidance on this topic.
That's interesting, Paul. It's so, you don't, as you started out saying, you buy insurance and then you just forget about it. Boy, you fall into that trap pretty easy because you didn't want to think about it anymore.
No one wants to think about it, and everyone thinks, oh, I'm healthy. I'll work on that down the road.
Yeah.
And it's unforeseen circumstances that you're protecting against. And that's in the early stages. As we went through those life stages and as you got older and older, some people like to look at life insurance. Some of these policies have long-term care options. Like there's a lot of different ways that you can utilize these for whatever life stage you're in.
And of course, you don't offer life insurance, but you can help guide people as to what their needs are. And I'll let you talk
We
about
actually
that.
do at
Oh, you do?
Ameriprise,
Okay.
and most financial advisors working for big financial companies can offer insurance through different agents, but that you've got to check on your own. But yeah, there's people that just do life insurance. You can reach out to them or a financial advisor who can help steer you in the right direction. If you want to call me with help, feel free. You can call me at 708-226-3412.
Thank you again, Paul, for being here, sharing that with the viewers. For Paul Munichel with Ameriprise Financial and myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you good investment day.